Trump bails out farmers. Who wins on Wall Street? All right, let's talk about today's big news. Trump is bailing out farmers, especially soybean growers, with billions in aid. This isn't just talk. It's the kind of policy that can shift markets in real time. Farmers have been crushed by tariffs and trade friction with China, particularly soybeans. Imports were cut, retaliation hit, and that pain rolled straight into rural America. So now the administration is stepping in, using tariff revenue to fund relief and keep farmers afloat. Why does this matter to us as traders? Because when government money flows, certain sectors move. And right now, the agricultural chain is in focus. Here's what the bailout means for the market. Farmers get liquidity. When cash comes in, they don't just sit on it, they spend it. Seeds, fertilizer, equipment, storage, and logistics all get a lift. It's a ripple effect that goes from the field all the way to publicly traded companies. So let's break down the names most likely to benefit. Corteva, CTVA, big in seeds and crop protection. If farmers have money again, they'll invest in inputs. Deere & Co., DE, the tractor king. Farmers with liquidity don't buy maybe items. They buy capital equipment. Deere is always the first stop. The Mosaic Company, MOS, and CF Industries, CF. Fertilizer demand rises with confidence. More support, more nutrients in the ground. Archer Daniels Midland, ADM, and Bunge, BG. These giants handle storage, processing, distribution. More activity upstream equals more throughput for them. Nutrien, NTR, another global fertilizer name positioned to ride the same wave. Agriculture ETFs, DBA. If you don't want to bet on one company, this ETF spreads risk across the entire farm supply chain. Now, if I had to pick just one single play, I lean hard into Deere & Co., DE. Here's why. When farmers suddenly have capital, equipment is where the biggest discretionary spend goes. Deere dominates this lane: brand, scale, and ability to deliver at volume. The upside from farmers upgrading fleets and machinery could outpace the incremental gains in input providers. Remember, inputs like seed or fertilizer are recurring costs. Equipment, though, is the chunky spend. That's where liquidity flows fastest when confidence returns. And with a bailout this size, you're talking about a fresh injection of confidence. But let's keep perspective. This is speculative. Execution details matter. How much money, how fast, and how it's distributed. Will it all go to soybeans? Or will corn, wheat, and other producers see a lift too? So yeah, Trump bails out the farmers. Wall Street bails into agriculture. My eyes are on Deere. That's the cleanest way to ride the wave.